Good morning. If we can ask folks to please take their seats, we'd like to get started.
Good morning, everyone. My name is Warren Payne. It's my pleasure to welcome all of you attending both in person and virtually to the Washington, D.C. offices of Mayor Brown. As a firm with a very robust and very active international trade and public policy practice, not just here in D.C., but in Europe as well, anchored by our offices in Brussels and London, it is our pleasure to host this morning's discussion on the future of the U.S.-EU trade and investment relationship. It is a relationship that is very significant, not just to stakeholders on both sides of the Atlantic, but we believe to stakeholders globally as well. So we are looking forward to a great discussion today, looking forward to great questions. And with that, again, welcome, and let me turn things over to Ken.
Thank you, Warren, and thanks to our friends at Mayor Brown. My name is Ken Levinson. I'm the CEO of WITA, and we're so pleased to have you here in person today. We see so many of you online. It's a real pleasure to work with the delegation and Mayor Brown on today's event. It's an interesting time in Washington. We're all certainly on pins and needles, and no one has anything else better to do this week than to be here, but we are glad that you're making the time for us to join us here in person today. We have a lot going on that we're going to be launching in the weeks to come, especially as we get a little bit more information on the political situation here. We'll be trying to adapt to what might be coming to with our programming, but we do have our International Trade Conference coming up in February that'll have both online and in-person components, and hope to have you all here for that. And with that, we'd like to invite up the ambassadors to please come on up for our discussion. Ambassador Susan Schwab and Ambassador Neliupšienė, thank you so much for joining us today. They're going to have a armchair discussion or a standing stool discussion, and then we will have a panel discussion following that. With that, I'd like to turn it over to Ambassador Schwab.
Everyone, to Mayor Brown, and in particular to Ambassador Jovita Neliupšienė. I am not going to spend a lot of time on the ambassador's bio, other than to say she is absolutely the most qualified person the EU has ever sent to Washington, D.C. She was Vice Foreign Minister. She was Vice Minister of Economy and Innovation. She was Lithuania's ambassador to the EU. And I would just, a little footnote here, any of you who have not visited Lithuania, you need to get your you-know-what to Lithuania. It is a fabulous, fabulous country to visit. And just see me afterwards if you want details. So, Madam Ambassador, let's start with the easy questions. You can't actually start a conversation in this town this week without talking about the election, because we haven't heard enough about the election. Let me posit that regardless of the outcome of the election, and I'm not asking you to take sides, not asking you to pick winners or losers, but regardless of the outcome of the election, the US is likely to have, let's say, a more proactive trade policy. Probably higher tariffs, probably more industrial policy. one way or another. And some of the sectors that could be impacted could impact the EU member states, the economy. And I'd be curious what kind of planning, if any, the Commission, EU member states might be doing in advance of that. There was an interesting political article the other day about sort of aggressive planning or planning for an aggressive response if there was aggressive action on the part of the new US administration. So let's begin with the fun part.
Well, thank you very much, and thanks for spending this morning with us and on trade. Well, let me start from a bit kind of a zoom out from your question a little bit. You know, if you ask, you know, if I could do a poll in the whole here, can you name me at least one sector where EU and US is not cooperating? Can someone actually come up with the idea? Well, the thing is that it's very difficult to answer this question. Well, maybe if we dig very, very, very deep, we can find one very specific, very boutique thing, which is just about to go from the scale-up startup to industrialization phase. Maybe that could be one very small thing. Otherwise, you know, our trade relations and cooperation is like everywhere, every sector, every state, you know, and I think that's actually speaks for itself. So whoever and whatever policy you decide, be it tariffs, be it industrial policy, be it, you know, environmental policies, it's in one way or another, EU is there and could be kind of impacted if you wish in one way or another. And you know the numbers are actually huge. I'm sure the people around this hall know that it's like 1.7 trillion a year. So we have a half an hour of discussion. So probably by the end of this discussion, the trade which will cross the Atlantic, it will be around 60 million, because it's around 2 million a minute. So this is how huge it is. So whenever you think or try to come up with ideas what to do with trade policy, tariffs, it actually will impact. The thing is that it's never like, you know, there is no coin which has one side. It's always two side coins. So whatever you do on trade, you always have to have a possibility to count or to have evaluation how impactful it will be for your own economy, which I think sometimes people forget to measure. And another is that sometimes when you, and I worked for the government for more than 20 years. So sometimes when you are in the government, you'll be like, oh, everything is so simple and it's so straightforward. You just do, and it's everything will be crystal clear in half a day. But nothing of that is there. And you know, I travel quite a lot to different states. I've visited already 17 in 10 months, and I can tell you that people still believe and still remember what happened in 2016. And I don't call it was a aggressive or other kind. I think we should not use those kind of words. The initial idea is we work together. Whoever is in administration, we will always have an interest to work with US. If there is measures, I think that, you know, we are on the same, you know, on the same values. We believe in the same rule of law and order of the world, and I think that we can really stand our interest in one way or another, counterbalancing the measures, well, one of the family members decide to do.
Okay. So as in your role as ambassador, one of your key roles, we've already talked about visiting 17 states. One of the roles is making friends and influencing people. I suspect you get up to Capitol Hill from time to
Making
time.
friends.
Making friends.
We
see.
don't
Okay,
influence
Don't
people.
influence people. I got it. No, that's a very good point.
We may like to influence some decisions, but not people.
That is a,
Sorry.
no, that's actually, no. I use the trite phrase, idiom, and I stand corrected. Okay, so making friends and influencing policies, perhaps. For that, obviously, you must have what we call an elevator speech, right? The pitch that you have when you meet with a member of Congress or a governor. Tell us about the EU's elevator speech or your pitch on behalf of the EU when you're out and about talking about your constituency.
Well, first of all, I already started actually there. Our cooperation is everywhere in all the sectors, and you cannot find a state where EU is not in the first three major trading partners and the major three investors. So whoever is my counterpart, I can draw the nice card and say like, look, this is how many jobs we are creating in your state because we have trade with you. But I think that what is important, especially in the Congress and on the state level, is actually that if we are really true to ourselves and we care about our national security, our technological advancement and advantage, our role globally to set the standards and to be the ones who actually has this edge technology for the good, we actually have to work together. Because if we are looking around what is happening in the world, the Ukraine, Middle East, Africa, all bad guys actually are ganging together. And it's a coalition of ill will. And they are helping each other in all their endeavors. And just yesterday was a very good example. You know, the Chinese just sanctioned the American drones. It's not that it will kind of change all the landscape of American drone industry, but it'll have a very specific impact. It has an impact on their American support for Ukraine. So it's a really very targeted, very useful. I think it's very difficult to say, okay, we cooperate on values, on human rights, and this is what we can silos that from what we do on trade or what we can do together on dealing with non-market economy. Everything is actually in one basket. We are operating not in the isolations or in silos because it would be too easy. And nobody ever promised us that it will be too easy.
So that is very well said. And the coalition of ill will, I think, is a wonderful turn of phrase. And I'm going to come back to the EU Trade and Investment Footprint website. But since you raised the Chinese sanctions and Chinese coalition of ill will, and since you're from Lithuania, it would be hard to find any country in the world that has experienced this the way Lithuania has experienced it. Talk about areas of geopolitical mutual interest, particularly where trade is involved, and here, continue talking about China, if you would. The EU talks about de-risking. We have conversations about de-risking, decoupling. You can call it what you want, but clearly there is a mutual interest in terms of how those relationships play out. How would you see the EU and the US approaches converging and diverging? How are they similar? How are they different? How could the cooperation improve?
Well, if we would be having this conversation 3 or 4 years ago, I think that we are, quite a distance away. Maybe not the distance of the Atlantic Ocean, but quite substantial. But I think that the pressures of non-market economy, like such as overcapacity, unfair subsidies, and unfair pressures of the companies who are already in China, unfair treatment of those, send the same signal for all of our companies, be it American or be it European. The question is how you approach. We had probably decade-long discussions on with our American counterparts, how should we approach, because in US it's quite easy because of the different federal system and different governments. You say like, this is our challenger, our enemy, our competitor. We just go for it. We do a executive order and the thing is done. For us, it's a bit different. We really love WTO. We love institutions. We actually believe that our rule-based trade has a value because we are the bunch. We are 27 of member states who actually are relatively small as economies, and we all rely on actually open and free trade. Our economies rely on that. There is no other way because very few of us actually have natural resources to sell or to produce there. So for us, kind of relying on this was the premises, and it's always geographical neutral with trade. But I think that the pressures I started to talk had started to mount even, I would say, probably the one of the worst examples of those non-market economies pressures and not keeping to the rules or to fair trade understanding was probably COVID, when we saw actually all supply chains broken down, and the people who has kind of a possibility to control supply chains, they control supply chains. And if we rely or over-rely or we are over-dependent, we actually end up in much worse situation. So actually back in 2019, Secretary Pompeo in the Trump administration started what we called at that moment China and Indo-Pacific dialogue between the EU and US. Now it's actually known as Trade and Technology Council. And their idea of kind of at least merging the positions, keeping them closer, at first maybe was a challenging thing, but I think that, you know, when you feel and you have the same evaluation that we cannot keep up anymore with non-market economy pressures, be it subsidies, be it dumping, be it other kind of economic coercion, we have to work together, and that's probably where was the logic. And TTC, I think, was one of the most successful formats of that kind. And you know, when you think what happened over the last almost 3 years, and of course Russia's war in Ukraine was another tipping point next to COVID. When you see that at first, well, we can always simplify Russia there for grab Ukrainian territory. Simple. And some people even say that it's not of the interest of US, which is not the case, because here comes another big player in the game, is China, or in general, again, because has a huge influence and control on supply chains, actually providing 80% of all dual-use technologies and components Russia right now needs for their military and defense supply chains. So here come, and then this actually TTC becomes not only the one which focus on positive agenda, how we align our standards and how we do some nice good things together, how we define AI, which is extremely important, or how we define what kind of chips we're kind of lacking. the TTC becomes a place where we actually coordinate our positions on export control, on how we make sure that our sanctions works, and all those sanctions is introduced because of Russia's war in Ukraine. The coordination of the export control measures and is actually not really only against Russia, but against China and other countries and other entities of other countries, which actually are helping to continue this war.
Well said. Thank you very much. So let me stay with other opportunities for transatlantic cooperation and tensions, and that's in the climate space. Clearly, this is an area where we both have interests, we both have concerns. The EU is focused on CBAM, which in the conversation we had just prior to this, could either be something where we're on board or we're totally on the other side. And I don't think anyone here could predict how this plays out. I'd be curious about your thoughts on that.
So first of all, I think I have to start that CBAM is not a trade measure. We have a wonderful set of the trade measures, which we improved over the last 5 years, from anti-subsidies, anti-dumping, anti-coercion, like an IPI instrument, so international procurement instrument. So very nice set of the toolkit for the trade defense. And so CBAM is actually measured to ensure that we kind of contribute to decarbonization or our environment policy. This is one thing. Another thing is that we all probably know, and does not really very much matter if your party affiliation or ideologically, that one of the things we want to avoid when we implement our environment policy is the carbon leakage. When our industry actually, and I am coming from the country which is like on the edge, it's on the eastern border. So, your industry from moves only 30 kilometers, because from Vilnius to Belarusian border is 30 kilometers. So you can see the factory moving from this side of the border to the other side of the border, because this factory actually is energy intense. And that means, they're quite polluting, and, that it's more expensive to produce if European rules and standards are applied. So idea is actually to make sure that we avoid carbon leakage. And it's not really for everything, and, or for some countries or against some countries. It's we always like, to say that it's really geographical neutral. It's not really for against one or another country. You have to get, in order to trade in certain sectors, you have to reach certain standards. We will never reach our, environmental global goals if it will be us, you, and, Japan, Korea, and some more, Australia, and some more doing this. Everybody has to contribute their own, especially who are major polluters in the world. So this is one thing. Another element is really very limited which sectors we have. So and when you look, what we trade actually in all those nice charts and statistics. So usually this is really not the one which US trades, and it's kind of a bit, probably would be too complicated to, for example, to trade in cement. I'm not sure if technologically possible actually to cross
No, I think when it gets, I think you're right about cement. I think from my perspective, and this is just my own personal observation, that CBAM starts to look like a trade measure when you get to chemicals. And you start moving to the next set of value-added products, starting with chemicals. And then it starts looking like a trade measure. And in my mind, the question is, do we end up with the same kind of situation we had with the aviation issue, where the US and China and various other countries are together angry at the EU, or whether we're in a situation where the US and the EU are working together versus other major polluters. So it's going to be interesting to
But
see.
I have to say that actually, especially with Senate, we have a lot of conversation on the CBAM, how it works, why it works, how it kicks on. This is one element. Another element that U.S. standards is much higher than the other major polluters. So you actually can really benefit from our measures. And one more pitch, as you say, like you always have to have an elevator pitch. It's only in 2026 that some of the measures are like real measures starts to kick in, because up till now it was more reporting than actually and then for the next 4 years, there's still, kind of a gray period, preparation period. I think for the industry like US, it's much more easier to prepare for the measure the way we actually build. And maybe while we are kind of still having those gray periods or different level, we can actually talk through and see if we can really come together and word align. Like people say that I should not use the word align, coordinate what kind of measure we have on both sides of Atlantic. One of the initiatives, by the way, in the TTC was actually, why shouldn't we create a green technology market around the Atlantic, a transatlantic green market? That would be actually then kind of avoid all those sharp ends we sometimes have in the discussion.
So we're about to run out of time. I'm going to ask one last question, and that's about the EU trade and investment footprint and website. Going to your question of pitch, the people who are here in the room, you have those snapshots, those big postcards in front of you, but maybe you could describe what you have available to you when you go in and see a senator or member of Congress or a congressman, because it looks like you've got some pretty interesting granular data that you can sort of hold up and say, hey, this is why we're important to you.
Yeah.
Tell us about it.
So first of all, you don't need to print it and save some forest and trees. You can go online. There is a barcode, but it's really the tool we developed together with European Commission, developed together with our partners here to make sure that it's statistically correct. And I think that what is important is actually to not really to have the numbers, but when you say 1.7 trillion, people not necessarily except you and some more in the South would understand how many zeros you have to put to 1.7 trillion. So when you actually, I think that it's important another element is these numbers, what we trade, not necessarily kind of tell this real story, what is behind, what kind of industry trade, how many jobs it trade. And not only, somewhere not in my town, but exactly in your town, in your state. And this is for me, it's extremely good tool when you want to see actually the level of cooperation, the depth actually of cooperation between the EU and US. And when you do those analysis, I think that what mostly resonates is how many jobs, trade and investments creates. And only the headquartered companies in European headquartered companies in US actually creates 3.4 million jobs. That's a lot even for US. So it's not that you can just say that it's. And another interesting story, when you go through the states, you can be surprised actually where we cooperate most and which sectors. As I said, almost all of them there. But you can actually see sometimes that because of this trade data or investment data, the cooperation goes even deeper. You would get a request. Oh, we talked with your business. They say we have some kind of strange regulation. Can we do that? And then the state like Colorado then kind of comes up and says, oh, we will do the European type of regulation on digital. Okay, we can talk, and we spend a lot of time, and it's really very diverse. The number one, by the way, trading partner for EU is Texas. Number two is California. Investment wise, it's reverse. So that's but we trade with District of Columbia. My people say like you have to talk about the place where where you are in here. So we still trade almost 8 billion. So even with District of Columbia, so the numbers is that huge.
Well, Madam Ambassador, thank you very much. For those of you who are online, the QR code is on the website, the EU website. Madam Ambassador, thank you very much for spending time with us today. Thanks for what you do.
Thank you for having me.
And turning the microphone back to Ken and WITA.
Thank you so much. Really grateful to the partnership that we have with the delegation, with your embassy. Thank you so much for joining us. We have a panel discussion we're going to be kicking off in just a moment as we get the chairs back up here for our panel. So if you folks want to grab a quick coffee or a water, go ahead and we'll be right back with you in about 3 minutes. Good morning. If folks can please take their seats, we'd like to get our panel discussion started. Well, thank you all for joining us again and staying with us today. We have a great group of people here in the room, and we have over 150 people online. So welcome to all of you watching us on Zoom. Thank you so much for joining us. We had a great discussion with the ambassadors, and now we have a terrific panel that we've pulled together with some really terrific speakers. Marco Margeri, the head of U.S. relations for ENI, and chairman of ENI New Energies US. Dan Mullaney, non-resident senior fellow at the Atlantic Council, the former assistant U.S. trade representative for Europe and the Middle East. Jonathan Sanford, the incoming president and CEO of the Global Business Alliance. My good friend Lisa Schroeder, global trade and global director of trade and investment at Dow and a member of WITA's board of directors. And our moderator and our good friend Penny Noss, the lead of the German Marshall Fund's Allied Competitiveness Program. Thank you so much for joining us and looking forward to the conversation.
Thanks, Ken. Thanks so much. What a hard act to follow. What a great start. Can I just do a mic check? Does this work? You guys all hear me? Perfect. Okay. So I thought there was one thing that a couple of things I took away from the conversation we just had, but the 2 million a minute is one that I think is a great statistic. And when you think about it, today's Halloween, and I have to admit that my candy bowl is full of Haribo candy, which is a great German company, has set up a huge facility in Wisconsin. And when you think about sales of subsidiaries, it's 5 times what the trade is. So whether it's McDonald's in Europe, whether it's the Haribo, the Trader Joe's, I bet we have a few Trader Joe's, Lidl, Aldi, Food Lion,
customers here. Those are all European subsidiaries in the United States. And that's 5 times what the two-way trade is. And then on top of that, you put the investment, and you have the stock of the investment as well as the flow of investment, which is even greater than those other two. So fascinating time to discuss the US-EU relationship, where it's headed, and what we're thinking. So first, I wanted to start and see if there's anybody else that had reactions to what we heard from the Madam Ambassadors this morning that you would like to comment on. For me, the one that takeaway that I particularly had was that's the most I've heard the word China, I think, in a while being discussed. But maybe just to get some quick reactions to the ambassador speech, and then we'll move into asking each of you a couple of specific questions. So I don't know, Dan, if you had any quick.
Hey, yeah, I do. I do have some quick reactions. Really interesting, and it is true that the U.S. and EU cooperate. And can you name a sector where we don't cooperate? I think that's right, and we share the values of rule of law, democracy. The real issue comes about when you have regulations on either side to address some of the new challenges, whether it's climate, supply chain resilience, and is that regulation interoperable with the other partner, or does it create barriers? So in the United States, we passed an IRA, which is wonderful because it meets the Paris Agreement obligations. On the other hand, it has some trade glitches, let's say, with it. And so does that then become the point of friction between the United States and Europe? And it risks doing that unless you have some ongoing set mechanism to reconcile those differences, or even better, build interoperability into the law or regulation. I'd say the same thing for CBAM, which is in fact a trade measure, because it's going to put charges on US and other products. You know, can you build interoperability into that agreement, that domestic legislation, so we don't end up clashing? We each are going to take unilateral measures to meet these challenges. Do we have a mechanism to make sure that they are built so that they're interoperable?
Thanks for that quick reaction. So Marco.
I'll name 3 keywords that I derived from the speech. The first is states. And I really couldn't commend more the European delegation for taking this step into delving into how, for the European Union and trading partners, states and states legislations and the community that forms around trade and foreign investments in states is essential. Because investments do not happen at the federal, they really happen on the ground. The second aspect is Ern's comment as a civil servant on the fact that when you're in government, sometimes you need to put emphasis on the trickle down of things. And it's true, the IRA is a phenomenal example of how this country works on activating facts on the ground, and Europe works on creating solid frameworks. And I think I'm in the energy and climate sector, there is no good climate policy that doesn't put the two things together. And they, at the present time, sometimes they are, some other times they're not. And I would say a third question was specifically on CBAM. I think the question on CBAM is highlighting what the European Union is doing. Well, if you look at what's happening in Congress today, the question of putting a value on the carbon content of products is not a European only question. It's a global question that Congress on either side of the aisle is confronting with different measures. I'm always laughing saying that Senator Whitehouse has proposed the ETS and Senator Cassidy is proposing CBAM. Obviously, it's not the case, but practically the key questions that we're confronting are the same.
Thank you. Thanks so much, Margaret. Thompson.
Yeah, absolutely. So I think the way you framed it up was interesting, and the conversation around this bipartisan cycle for industrial policy that we're seeing in the United States is not going anywhere. You have this populist economic period in the United States combined with geopolitical tension, and that's created this bipartisan effect of supporting active industrial policy in the United States. And I don't think it's a short-term phenomenon. It's going to be with us for a while. I also thought the sub-federal system reference was interesting. So much velocity of action happening in states and state legislatures, where at the national level, you have this partisanship that's metastasized in some ways that has brought Congress to a little bit of a gridlock. it's the opposite. You still have this consolidation of viewpoint within the states, but it's had a drastically different effect where you have state legislators and governors taking positions on really national issues. And that's a trend I think we're going to continue to see as well.
Thank you. Thanks so much. Lisa?
I'll just add two really quick points to that. And I think what was fascinating about the conversation is WITA, and with full credit to the delegation for putting together the investment report. And those are great numbers. But the reality is those numbers also rest on the companies that are doing that trading. My company, Dow, we send substantial material back and forth across the pond in the transatlantic relationship. And over 90% of that is intra-company. We're sourcing our own facilities. We're enabling that production. We're keeping those jobs going. And that is a very, very strong foundation that this relationship rests on. So when we're talking about the numbers and the policy that goes with, I think a great part of what we can talk about today is how we do a better job integrating that commercial reality and the voice of the companies who know on a day-to-day basis what it takes to be able to move that product, to keep those jobs going, and to encourage the innovation. So that's an advantage in the US and EU relationship that I think we can do a much better job to leverage. And the reference to a transatlantic green marketplace is a perfect example. Companies are doing it now. We're looking to decarbonize, to innovate, to drive more sustainable production, recycled materials. That again is a foundation that can make that marketplace a reality, especially when we're working together on the enabling policy environment, truly makes that work.
So if I could stick with maybe Lisa and Marco, and then I'll come to you, Jonathan and Dan. But Lisa and Marco, when you're asked by your internal decision maker who are thinking about how to allocate capital, what are you hearing, or what are you being asked when those decisions are being made on where to deploy capital today, where that return on investment is going to be made, and how to think about either the United States or Europe as destinations for that capital and that investment moving forward? Marco, maybe I'll start with you, and we'll move to Lisa.
Now, NEI is a very particular company in the energy space. We are an international energy company. We're in 68 countries, and clearly we have a legacy. And that legacy, for example, is bringing us very much 50% of what we do in Africa. When we move into transition businesses, the risk profile of the energy transition businesses changes completely. And it will be no surprise that our oil and gas investments here, although historical, are a fraction in our global portfolio. Our renewables investment here have been a very material footprint in our global renewable investments. Our biorefining investments here are targeting a sprawling market. Our innovation and breakthrough investments, we are one of the lead investors in the lead fusion company, private fusion company in this country. They couldn't happen really anywhere else, simply because this is the only space in the world where you're really bringing R&D out of the labs and into the market at this fast-paced speed. So to your question, I think every business model has their own capital allocation. In the United States, you really have, I think, three elements of strength that are nowhere else: innovation and the ecosystem, including skills and including a unique way in which academia speaks with the private sector. I think you do have resilient demand for decarbonization. Let me just quote one figure. If you look to total emissions, the difference between the European Union and the US is staggering. The European Union has decreased their emissions by a significant amount, and the US has only plateaued. But if you look to the total emissions for GDP produced, and that's where growth enters into the picture, the US has decreased it by more than 50%.
Yeah.
So clearly this is an incredible market where new business ideas and new business models are coming. And very last, I would say the scale. And this is a big thing with the IRA. We can discuss, I think, at length how the IRA is being foresighted domestically and completely blind at border. also vis-a-vis US foreign policy objectives. You cannot put together the Partnership for Global Infrastructure and Investment and then forget about it when you design market access policy. But the impact of the IRA on foreign direct investments, just Italian foreign direct investments over the past 4 years have added 30%. So you cannot minimize the impact that the IRA is having on driving down the cost of technologies, and this is in turn something that is good for Europe and good for the world.
Love that. Thank you so much for that. Lisa.
Sure. I'll be specific because this was actually something that was called out in our recent earnings report, was referencing the increasing challenges in Europe. You know, we're seeing sluggish demand, but there's also real concerns around the lack of clear, consistent, and competitive regulatory policy. When we look at these types of, there's a number of issues, there's a number of factors that reflect around not only existing investments, but also we're talking about prospective new investments, especially around the innovation space, decarbonization, et cetera, energy policy, demand, challenges of import competition in Europe right now, but especially that regulatory environment. And to be fair, that's a growing challenge we're seeing here in the United States too. When you have inconsistent, overwhelming amount of regulatory burdens like that, it is a real challenge, especially as companies are trying to innovate. So I think one of the areas, and we've seen it in, for anyone who hasn't seen the Antwerp Declaration that so many companies and businesses across Europe signed on to, it reflects where we need to drive a better enabling environment for these types of investments. Review of current policy so that we can get better clarity, consistency, narrowness of definition so that there's a clear understanding of what the obligations are, but also on how that's working to enable and advantage these types of investments rather than adding on particularly complicated burdens to business operations.
Thank you, Lisa. Jonathan, I think you've recently done some polling of some of your member companies. And again, your association is primarily investors in the United States, non-US headquartered companies, but operating in the US. But be curious what insights your companies are telling you, how they're seeing the US environment, and anything you can share from that recent.
Yeah, absolutely. And that's exactly right. We represent about 200 international companies. These are large American companies in their own right. The average GBA member employs about 12,000 US employees, but all of our members were founded abroad, found success, and made a deliberate decision to invest and create jobs here in the United States. So our organization does a lot of, works primarily with US policymakers, and so we're always interested where the American public is on issues related to cross-border investment and trade. I'm sorry I'm even being so, using the expletive of trade in this conversation. Apologies for the profanity. But that is where most Americans are these days. They view trade in very negative terms. And so, you know, thinking about the cross-Atlantic relationship, I think is really important. There is definitely support for working with friends and allies in this friend-shoring idea. That is overwhelming supported. There is support even, you know, a lot of people have question marks about the global economy. If I took you back to this polling in 1998, about 2/3 of Americans had a positive view of cross-border investment and international trade. It's basically inverted to about 1/3 still hold that view. A lot of people have question marks. And so it's important for policymakers and to understand that when you think about investment in particular, this isn't a measure of consumption like some of the other discussions around trade. This is a discussion or really a measure of growth and creativity, because when a company invests in the United States, it's a decades or century-long decision. This is an investment that will continue to grow. And something that's interesting in the numbers, I really appreciate the fact sheet that was provided. But if you look at and if you'll bear with me for just a moment as we delve into the foundation of how they measure foreign direct investment, there are 3 components to FDI. The first is new equity. The second is reinvested earnings. And the third is debt instruments. So that one's a very small one. But if you look at those first 2, and I take you back to 2016, about 16% of all foreign direct investment in the United States came from reinvested earnings. Most of it was new equity. If I looked at the numbers this year, or I should say last year, it's 61% is from reinvested earnings, which is to say that current investors in the United States are the ones who are driving that foreign direct investment growth. New equity is sitting on the sidelines in ways that it hadn't once before. So it's important that we not take the investment for granted and that we continue to drive to encourage companies to invest here and keep a policy environment that keeps the United States competitive relative to the rest of the world.
Thanks for that. Super interesting. In part because what you're saying, the reinvested earnings piece is also, I think, somewhat driven by tax policy. We all know that trade and investment is driven by not just trade policy, but by many other policies that are out there. So that's I think, an interesting point that comes in. So Dan, as a former trade negotiator, how do you, hearing all of this now, how do you start to think about where the priorities should lie for the government? And what is the role of a trade negotiator versus the role of other government officials in the context of what you're hearing here?
Yeah, thanks. I think, we do have a huge opportunity to build this transatlantic green marketplace. I think we need to create strong investment environments in both of our markets, and also strongly kind of interoperative investment environment, because that's how we work towards our joint competitiveness. And a lot of that joint competitiveness, I think, does rely on pushing some of the green issues. I think as a government negotiator, I think of this in terms of two things. One, what can we do to facilitate that joint competitiveness? I think there are two things. One is you need the input from the private sector, such as those on this panel, but also civil society, to figure out what policies will encourage the kind of investment and create the kind of investment environment in a transatlantic marketplace. And I think you also need to have that work cross transatlantically. So when the EU looks at regulations and legislation, they would be wise to get the input of US stakeholders and EU stakeholders as to what is going to create a good investment environment, what is going to create a good transatlantic environment. Same thing in the United States. So I think, and then at the government level, in addition to input from the companies that are actually on the ground creating these investments and jobs, at the government level, I think we need to be also interoperable as we're developing rules and regulations that impact competitiveness, that impact the green marketplace. We need to be talking to each other and make sure that the regulations and other provisions we put in place don't create collateral damage to the relationship, but also maximize the transatlantic investment environment. So we need to set up, I think, structures where on an ongoing basis, we talk to each other about how our regulations are going to impact the investors from the other party.
And how do you do that? Is that a trade agreement thing, or is that a dialogue thing, or what is that?
That's a very good question. We've gone back and forth between regular dialogues, which is a little bit what we have with the PTC, and more comprehensive agreement type things, which we had with TTIP. I do think that some kind of an agreement where you set in place a structure that you do not have to reinvent with every new commission, with every new administration, because that's a cost inefficiency. Mm-hmm. I think an agreement that provides for input in the regulatory processes, that provides input both from government interlocutors, but also from the private sector, in some sort of a framework that could be ongoing. As I said, that you don't have to recreate every time there's another election.
Got it. Okay. So I think to build off of what Marco's point. So Marco, you were talking, I think, about like innovation and scale and some other elements about the U.S. ecosystem that makes it quite attractive for investment at the moment in the segment you're talking about. And when I talk to companies, I almost feel like we're having multiple conversations where the very innovative companies that I speak with are actually calling for a transatlantic trade and investment partnership 2.0. They want the U.S. and Europe to go faster together, particularly on the innovation front and the very cutting edge technologies. I saw a Bloomberg piece yesterday that said China is the lead on 5 of the 13 most critical technologies at the moment. And within the next 2 years, will be the lead on 12 of the 13. And so then there's the conversation that takes place that's maybe at the more traditional industrial policy level, slightly more complicated, a lot of sometimes disputes that derail other parts of the conversation. Going to your point, Marco, it seems to me that companies are investing in the innovation and see the innovation piece as where the growth is going to come and the most critical pieces are. How do we reconcile that with the broader U.S.-EU relationship, and how should we be thinking about that? And Lisa, I'll come to you second on this again as well.
Well, good
Just a heads
disclaimer.
up.
Good disclaimer is I'm no trade expert, and I will not be phrasing what I'm going to say in trade vocabulary. So what I'm going to say may be quite far off the trade vocabulary. But I think we shall recognize from Europe that there are at least 3 mega challenges that they may not qualify all as externalities really, but they are political. Defense and security and geopolitics, climate change and the energy transition and the digital growth. These 3 spaces require a degree of speed and innovation that is not bottom up, that is not just market driven, especially because they require their consequences to be even and spread out to different regions of the world. You cannot imagine an energy transition where, as last year, the whole of sub-Saharan Africa has installed, just by concessional finance, less solar panels than Belgium. We all love Brussels, but not for its sun. And we cannot imagine that digital developments or security developments leave those regions alone. So if you see this big picture, clearly transatlantic partners do not have an opportunity, they have a duty to create spaces where these 3 streams are connected. How does that happen in the historical trade logic? I cannot see politically, I cannot see the European institutions going into a whole fully fledged trade agreement conversations in the short run. And I don't see a lot of Congress appetite for that either. What I see, and I go back to the IRA there, what I see is that it's in the interest of the US to have supply chains that work and connect the US to where critical minerals are, to where some skills and technologies are, to where market access need be. Take AI and hyperscalers and what's happening with Saudi. What's happening with Saudi is faster than what's happening with the European Union. And I can't come around this. So we need, you can call it dialogue, you can call it sectoral agreement, apologies for the swear word, you can call it industrial policies, but you need to call it a transatlantic cooperation on these 3 key streams. And the energy transition does not happen without this, or even worse, it just happens with Europe being sort of forced to look the other way around.
Yep. Thanks so much, Marco. Lisa.
I also pick up knives on what Marco was just saying. And I think that's exactly that element. We talk about critical minerals, we talk about supply chains or economic security strategy, critical raw materials. And those are all slightly different conversations, but there's a very common interest. And certainly there's a very common approach from the business sectors that are involved. I think especially when we think about supply chain, there's so much focus on, well, we'll get lithium and you'll make a battery. There's a lot of things in between that are required to actually turn that battery. And full credit, this ties back to what Dan was saying too. In terms of how do we get there, there were 2 great examples, very concrete examples over the past year. And again, with full credit to the Commission, the workshop and to USTR, the joint workshop on Transatlantic Initiative on Sustainable Trade back in the spring, as well as a recent webinar they did around trade and recycling, plastics recycling in particular. Those were such great examples. They started from requiring industry to get together to bring forward a common approach. US and EU industry sitting down, working out the agenda. We were part of a battery recycling workshop in that TIS workshop back in the spring. And it was a perfect example. I learned things. You know, everybody from the cobalt guys to chemicals to precision manufacturing, mechanical equipment required to get to the auto and the battery. And then how do you drive the recycling process? In essence, what we did in those sessions was kind of lay out, here's how it really works. And then here are the chokeholds across that supply chain that we need to be working on together to address. Similar with this webinar that happened around plastics recycling and the standards. It's a vast amount of information, a couple of trade guys, a lot of standard setting guys. But the gist of the conversation was a lot of work is going on in this space. The chance to actually have a common conversation around that and figure out where those standards would fit in together, where we can work, build on each other to really get to what are the common problems? What's the definition of waste versus feedstock? How do you feed recycling if you're inhibiting the very transit of the materials that you need? End of life. There are so many things that different components are working on, but it needs to be a common conversation. The challenge has been in the follow-up. That's kind of what Dan was alluding to. How do we structure so that a great conversation results in a really good ideas that become the work plan we take forward? We've done that in the past in the transatlantic relationship, and there's never been a better time to be creative about it now, because that's where you could look at things like sectoral initiatives, specific, concrete, tangible elements that demonstrate where we can work together, but really make a difference for a number of industries that are struggling.
So just a heads up that we're going to turn to the audience for questions in a moment. And I don't know, Ken and Diego, is there online questions that people can also submit that you guys will call out to us? Okay, so if you're online and you got a burning question, please put it in the chat Q&A function and we'll somehow find it and make sure we try to answer it. So Jonathan, given what you're hearing here, how are your companies thinking about and looking at kind of the innovation piece maybe versus the kind of the more traditional industrial policy piece? And how are they thinking about how to move forward on these kind of two streams of work?
Yeah, great question. Thank you for that. I think it's important to think about where investment's coming from in this discussion. 8 countries represent 75% of all foreign direct investment in the United States. Let's just do a pop quiz before we take your questions. I'm going to ask you one. Anybody name those countries? UK, Mexico, Canada,
Netherlands.
Yep, Japan, number 1, Canada, number 2, UK, Germany, France, a number of EU members, all of them friends and allies of the United States, all of them sharing common views. And so that is 75%. The other 25%, there are more than 100 other countries that constitute that other 25% of the investment here in the United States. And so by just working with our friends and allies to harmonize regulation and look at ways to spur innovation, you know, what's really interesting in the statistics is that so much foreign direct investment is helping to really propel U.S. innovation. And so when a company invests here, it does so many things simultaneously. It unlocks the CapEx. It creates great paying jobs across the country. Our members operate in all 435 congressional districts. And so you can find international companies everywhere. But it also gives other nations a stake in our economic success here in the U.S. And so as the U.S. is pursuing policies to drive particular industry to the U.S., I think that there's opportunity for that in many ways. International companies are global leaders in sustainability and innovation, and so they import that world-class know-how to the U.S. And so I think there is excitement. I will say there's also areas where there is concern. You know, much of investment comes through the form of M&A, and so that's not just here in the United States, that's across most advanced economies. And so when you see the issues around national security being conflated with economic security and an effort to try to do something through the regulatory process that can't be achieved through the marketplace, that raises concerns. And, you know, you see Committee on Foreign Investment in the United States, for instance, CFIUS, taking a very aggressive approach on a deal. It may affect that deal, but it's certainly going to send a signal to the rest of the world about America's commitment to treating international companies fairly.
And I mean, one question, your members are mostly big companies, right? So, because when I think about Silicon Valley, and I think about a lot of great of the big companies that have come out of Silicon Valley, many of them were either people who came here to go to school or were foreign companies who came to the US to look for capital and for that unique secret sauce we have in Silicon Valley, and then grew to become kind of the giants they are today. And so are you hearing anything about that as well? Or is it maybe that's just not your membership? I just wanted to check.
For the most part, you're exactly right. Our average member has about 12,000 US employees. So these are large companies, disproportionately large as you look at the direct investment landscape. But many of them actually operate, and most of the manufacturers are actually the leaders in American R&D. And so many have set up incubators to work with emerging technologies. You know, there's so much interest in trying to develop, and I think that's what is exciting for firms who invest here. They have a vote of confidence. We have a world-class research base to draw from, and the partnerships and collaborations are critical to that. It's what is part of our secret sauce as a country, as you say. And so I think there's a lot of interest there in how they can utilize that and bring their own expertise and efficiencies to the effort. It's created a lot of synergy.
Yeah, Dan, before we go to the audience for Q&A, any final thoughts on what you just heard?
Yeah, when you think about us working together to create this joint competitiveness transatlantically, you know, weirdly, the steel and aluminum global arrangement, of so-called GASA, is an interesting case study, because here you had two parties sit down and say, look, we're gonna reach kind of a new innovative agreement to incentivize sustainable products, free market, incentivize market economy of products, and we're going to do something new and different, and then start with the US and the EU and then expand it. Well, we didn't get there. We didn't get there by the summit in October of 23. And why? We had this great objective. You know, was it because people were focusing on WTO compliance? Was that the impediment? Was it we didn't like the fact that if you're looking at othering China or trying to gang up on China, you can't be doing that? Was it, you know, some of the labor concerns? I mean, we need to, I think, focus on those areas where we share like a really important objective: sustainable trade, non-market economy trade. I think that's things we can both agree on. If we can't get to a solution because there are these other issues out there, wherever they are, whether it's relations with China, whether it's WTO rules or other things, we need to find some way of aligning those with our objectives and overcoming, or at least cabining off, those disagreements so that we can move kind of full-throatedly towards our common challenges.
Thanks for that, Dan. So now over to all of you. So looking around the room, if there's anybody, is there an online question? Let's start with the online question while all of you gather up the courage to put up your hand and ask a question. So online question.
What are the implications regarding outbound investment screening on competitiveness and innovation? The mention was made about regulatory burdens or regulatory inconsistency. Can the panel give examples?
Well, I just maybe one quick observation on that point. I asked the question of who are our largest investors. The second follow-up question to that is, with whom do we have trade agreements in place? And so if you look at that list of our top 8, the 75% of all top investors, we have a trade agreement with exactly one of them, Canada. And so if we want to incentivize and align, I think having a more formal structure on harmonization is critical. Export controls is an effort to deal with concerns, emerging concerns, but it's something that needs to be discussed, I think, and will be most effective if it's done not in a unilateral fashion, but with cooperation with friends and allies.
Yeah. Did you want Marco to?
A quick chipping in quickly on one particular area of trade that was, I think, marginal a few years ago, and it's now central, is that of natural gas.
Yeah.
The United States is today sending one of every 2 molecules that are consumed in LNG in Europe. It's the second supplier into overall European security of supply. Well, this combines our energy systems in a way that they were not combined only 4 years ago before the Russian invasion of Ukraine. I wouldn't speak about barriers here, but there is a convergence of mindsets that need to happen. In Europe, since 20 years now, we have the emissions trading scheme. We have a very deep-rooted monitoring, reporting, and verification system for ascertaining for example, the carbon content of the molecules that we import. That is one of the underpinning conversations in CBAM. The US has incredible technologies, like US players are world leaders in these activities, but there is no such thing as an MRV disclosure, a disclosure framework at the present time. So one of the big discussions that we need to have quickly is to avoid transforming the difference in our systems in a burden for what is a strategic piece of our trade. It's strategic for Europe for security of supply reasons, but let me say that Europe is not getting those cargoes for free. So it's a strategic piece of the US LNG export strategy. So that's, I think, a good example.
So for the questioner, with the outbound investment, the final rule that came out on Monday, I think that what's important about that is that it's focused, I think, on 3 specific technologies: AI, quantum, and what other that escapes me in my senior moment at the moment. But one thing it also does include, though, is a very strong statement about cooperation and coordination with allies. And I think that that's an incredibly important call out in both the FAQ and in the regs themselves with regards to how this is about focusing on specific, I want to take the fantastic term the ambassador used this morning, ill will, partners of ill will, and reminding people that these rules need to not only be targeted on the specific technologies, but on the specific parties. And one thing I think that has come up in the past between the US and Europe is that sometimes we've written general rules because we don't want to offend somebody. And we end up catching each other in the web. And that has led to ill will, bad feelings between the United States and Europe, when in actuality, we need to be focused on some of those partners who are maybe don't have the right perspective on the issues. So thank you very much for the question. And I think that it was an important question given the relevance of it this week. Other question? Yeah. I think we need the mic so everybody online can hear your wonderful question.
Merrily International Trade Today. I wanted to follow up with Mr. Mullaney on Gaza. And I'm not quite sure what you meant by labor, but it seemed like you were coming from a very American perspective naturally on the obstacles. But I think the EU would say one of the obstacles is reluctance by the US to remove the tariffs. Or at this point, tariff rate quotas, but to remove the restrictions. I just wanted you to handicap whether you think a Gaza can be arrived at in the next 2 or 3 years, now that the election pressures, particularly from steelmakers in Pennsylvania, will be lessened for a bit, I guess.
I mean, I would say that if we're able to align on the objective, which is to incentivize green trade, market economy trade, and to disincentivize that which is non-sustainable, non-economic, we can't get there. If we're sitting at the table and one of the objectives on the table is to achieve this incentivization of sustainable market economy trade, and the other objective is we need to blow up the 232 tariffs because we don't like them because they imply that the U.S. is a national security threat, which of course they're not. We won't get there. I think we need to figure out how we get past that divergence in objective and unite on the objective, which I think is a transatlantic green marketplace, which includes market economy products and sustainable products. So if we can line up in that way, I think the odds are pretty good. And I think some of the portfolio realignments on the commission side may make some of that a little bit easier.
Other question? If not, I have one. Okay, so I'm going to ask the question of the panelists. So if you don't regulate at the federal or the EU level, you generally then get regulation at the state level around some of the particular issues. And so you get more fragmented regulation than you do at the top. But if you regulate up here, it's less close to the people. So as you think about how do we need to be thinking about sub-federal, sub-EU level regulation and the role that plays in our discussion today, kind of the state, national versus the overarching?
Yeah, it's a great question, and it's a critical area that I think is getting more and more attention from companies that operate. For an international company looking at the U.S. market, they're actually looking at 50 different states, and you can have this tapestry of incongruity created very quickly on issues where we've seen it. In fact, states take mutually exclusive positions around social issues, for instance, recently. And so companies have to adapt to that. In one instance, I can think of a firm who had to set up an entirely separate entity to continue to service its customers in one state because of the policies that were adopted by the state government there. And so for a non-US investor looking at the United States, this can be very disconcerting. And so when you add to that the fact that states are not bound by international tax treaties, you can have a lot of creativity at the state level. And I spend a great deal of my job just trying to explain why a state doesn't want to become an international outlier on some of those issues. But all of this drives competitiveness and interest. And so I think it's incumbent on anyone who's looking at the United States as an investment destination to think about, you're actually looking at several different states, and it's a really becoming more of a challenge. And I think it's a long-term, 80% of the country, 40 out of 50 states have one-party rule. So Republicans or Democrats have control of the governor's office and the state legislature. And so you have this velocity of action because you have a consolidation of thought at the state level that doesn't exist. It's that partisanship that has kind of ground Washington to a halt in some ways that has really propelled itself in states.
Thanks for that. Yeah, when you're negotiating, you got government procurement agreements. Those can sometimes be a little complicated given state versus national. How do you think about kind of these issues as we think about how the US and Europe should work together, not only on these important industrial, tariff, other issues, but also on the broader investment climate issues?
I mean, it's wildly complicated.
Yeah.
And I think one of the factors is, of course, Europe is a collection of sovereign nations, and we are not, even though sometimes it
sometimes
feels
they
like,
think they are.
Yeah, well, sometimes yes, sometimes no, depending on the circumstance. So you have a whole very different institutional structure in Europe to the United States, and so we have the same issues in Europe. Like, what is member state competence? Do you have 27 different customs regimes? What extent are they united? That presents a challenge for the United States. I understand for the Europeans, they have the same issue in the United States. How we address the issue of government procurement, since you raised it earlier, was to go to individual states and have them sign on to government procurement obligations. And I think we got 13, I want to say, Ambassador, something like that, which is not bad. We had some big ones. But it's very complicated. You need to focus it. And a lot of the licensing of professionals is done, not even at the state level, sometimes the super local level, and sometimes by the association. So you have to piece together a lot of things to try to bring two very different systems, not bring them together, but make them interoperable.
Yeah.
Actually, if I could build up on that too, especially the interoperability point. As a company, as an industry, we believe in regulation. I want to make sure that that's very clear. But high standard, efficient, risk-based, sound science-based regulatory practices. And that's, I think, one of the challenges that you're illustrating. Even when you have, EU-wide regulation, if you've got 27 different interpretations of that, or customs authorities, 27 different interpretations of how you implement certain measures, that complexity, that lack of consistency makes it very difficult, especially not just for day-to-day operations, but when you think of those new investments and innovations. So I think that's part of what we're really trying to drive is how do we make sure that it's not only the regulation itself, but it's how it's implemented and what the requirements are that need to be incredibly clear and consistent so that companies can meet those obligations. We could support good high standard regulation, but also keep growing and doing business.
Great. I think we're in the final moments. Are there any final burning questions that you're only now thinking of that you'd like to have asked? Okay, if not, I'd just like to conclude first to thank our panelists, but also to conclude by saying I think all of this is important. We have companies here today, but the transatlantic relationship is really about people. It's about workers and the employment figures that I think that you have put out. I know we have US figures that are the same. It's about students. It's about researchers. It's about consumers, it's about farmers, it's about travelers. And I think that we always have to remember that it's people that are at the base of this, people that come together and make companies that trade and transact and invest. But it's the people piece and the prosperity of our citizens moving forward that I think we really need to remember and be focused on. So with that, if I could, a warm thank you to our panel for sharing all their fantastic insights.
Thanks for coming.
Thank you.
And thanks as well to our moderator. Thank you, Penny. Thank you, Dan, Marco, Jonathan, and Lisa. A terrific discussion. And a reminder that so much is happening at the subnational level, especially in the United States, and with all the uncertainty in our national election, there's so much happening at the state level. And really grateful to our partners and friends at the delegation for bringing us this important data on US-EU trade, and for all of you for sharing your experiences and challenges and opportunities that you see in US-EU relations. So thank you all very much. Thank you all for joining us in person. Thanks to those of you who are watching online. Really grateful to all of you. Thank you, and take care, everybody, and happy Halloween.
Thank you.